Those markets still appear to be all over the place. So while we had a brief respite yesterday when the US retail sales number came out, it looks like today all sorts of other issues coming to the fore, including Greece still there as well.
Yes, and if I can just pinch one of Alicia's comments about the markets, front and center in our market right now, remember from 12 o'clock for the next hour and a half, we have the futures closeout. Now, just interesting to see, when we last looked, there are about 35,000 contracts for June expiry still open, but if we look at the next closeout to September, there's already 180,000 open contracts there. So I think that goes to show that it has an effect, and prices will be bumped around a little bit unreasonably, but really there's better planning. It's not quite the volatility that we used to see on the closeout, but it is having an effect in pushing some of the prices around, particularly some of the heavyweights, like Anglo and Sasol, and all the top 40 as well. There's a pivotal level at around about 28,000. Over that, and we may see a run up. Staying below that, we may see a run down. So it's a very technical market right now.
And what you're also seeing, Ian, here is that some of the movements we see, some of the price movements we see on the JSE today might not really reflect the sentiment of investors.
Yes, absolutely. It doesn't, in a time like this, it's not going to accurately reflect the balance of buyers and sellers. It's temporarily disrupted, but by the end of the day, we'll probably see that balance coming back again.
And as this day progresses, of course, those retail sales in the United States, taking a closer look at them, Ian, they were down by 0.2%. The market had been expecting 0.4%. Your view on those retail sales, are they enough to give these markets a lift and show that the US economy is not quite as bad as we expected?
Yeah. Well, I think you have to be quite wary about looking at the US retail sales. Remember that fuel is included in retail sales. That's consumer demand for fuel at least, and that's a big factor, because just think of how the petrol price, the diesel prices have rocketed up over the past year. So that has meant that they may be selling more value, but no more in actual volume terms. And the same applies to other categories as well. Prices have gone up through inflation, but the number of goods haven't gone up to the same extent. So one's got to take it with a little bit of a pinch of salt and say, whatever the change in actual value doesn't necessarily reflect momentum in the consumer demand market there.
Well, perhaps just illustrating some of the volatility we're seeing on the markets, and that's, of course, is the Rand. So yesterday we had that Rand trading at 674, taking a bit of a recovery following the Euro's lead. Euro under pressure again today. We've got that Rand up above R6.80 again.
Yes, I think it has been following the euro. Certainly we saw the Rand starting today at around about 676, being up a couple of cents above, maybe 683 at its weakest. We are finding that exporters coming into the market, they will of course be sellers of dollars, or sellers whatever their export currency was, and buyers of Rand. But that hasn't been enough to hold it up. What we are seeing is international banks, particularly some of the American names, coming in and buying dollars. Perhaps it's just to balance off against the euros positions which they're covering there, but they have been also actively selling euros, selling it down from just under 145 to around about 143. And there's quite a strong correlation between the euro exchange rate and the Rand exchange rate against the US dollar, and I think that adds to the little bit of pressure that we're seeing on our currency right now.
Because that Rand exchange rate over the past year giving the South African Reserve Bank a bit of a headache. We had the annual reports out from the SARB yesterday, and 1.2 billion Rand loss, just illustrating the sterilization cost perhaps for the Reserve Bank of buying up those dollars.
Yeah, it's huge, isn't it? But one has to realize that it's funded in South Africa. The Rand cost of funding is around about 8 to 9%. That's the South African long bond rate. And they're investing in US denominated assets at anything between 0.5% and 2%. Wow, there's a huge income disarrangement there, and that has to be covered, and that's what it costs. Of course, they have to carry on accumulating reserves. Our reserves, as they stand right now, cover just over 6 months of imports, and the minimum requirement, the minimum global recommended level is a minimum of 6 months cover of imports. We're only just there, and compared it to some of the Southeast Asian countries, and they can cover years, multi-years of imports without export cover. So I think that goes to show there's a long way to go. I can see the Reserve Bank probably, as long as we have a Rand relatively strong, is going to have to absorb significant losses there, but it's a good cause and it's the right thing to do.
Ian, a couple of snippets of corporate news out today. We had results out from Centulla, and showing quite a strong recovery from where it was a year ago.
Yes, yes. You know, from a tiny, I think it was a 0.6 cent to estimating now this year 16 cents headline earnings per share. That is a big recovery. But if you look at the at revenue, that's only up by 10% from 2.2 to 2.4 billion. So I think what we have to say there is that the benefit has come not from an increase in the actual amount of business they're doing, but from efficiencies in the business they're doing. Looking ahead, I think that's a good sign.
Paladin, announcement coming out saying it's in talks, gives no further details. Do you read anything into that, Ian?
No, it's just not possible, Stephen. You know, there are no details. Whatever one has to think about it would be sheer guesswork, and I don't think we should go into that.
Okay, Metrorex annual chairman's statement that came with the AGM today, and talking about the results from its copper and cobalt operations, encouraging so far some power supply risks in the DRC. It also says that the National Union of Mine Workers can't do anything to stop or to prevent Vale's bid for the company because its operations just aren't in South Africa.
Yeah, and what an interesting bid, $1.1 billion. Now that's going to help Metrorex for access to funding that they didn't have. They always struggled in the past. And I think it's going to open up new opportunities for the copper and cobalt mining divisions that they have there, primarily centered on Zambia and on the DRC. And of course, you just mentioned the erratic power supplies in the DRC. Hopefully they'll be able to do something about strengthening the infrastructure themselves. So for the operating company, it's a good move. And of course, the mine workers union saying they're going to object to it. The operations are not in South Africa. They simply cannot be able to object to that.